Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now a new warning signal is flashing on this Bitcoin chart, while Bitcoin just confirmed this new bearish signal, while Ethereum is now rejecting from this critical area of resistance. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, just before taking a look at the Bitcoin charts today, we need to take a look at some news today, because today we have 35 trillion reasons to buy Bitcoin, because the US government debt just hit 35 trillion US dollars for the first time in history. This is a new record high. And the reason why this has anything to do with Bitcoin at all is because when new debt is created, that effectively creates new currency. So as the debt increases, the supply of US dollars also increases. Because how the government debt actually increases is by the government running a deficit, meaning they spend more than what they're making in taxes. And that difference between the spending and the revenue is effectively the deficit, where they have to borrow extra money in order to make up the money to spend all of that money. And a common misconception is that the US government can just print new US dollars out of thin air, and that's actually not true. It's the Federal Reserve that prints new currency, new US dollars out of thin air, and basically lends those new US dollars to the US government. And so basically the US government issues debt in the form of government treasuries, US treasuries like bonds, notes, and bills. And then the US Federal Reserve basically prints new US dollars out of thin air and buys that government debt. And so essentially, as the US government goes further and further into debt, more money is having to be printed in order to buy that debt, in order to basically sustain the government. And that's also why the US government can't just print $35 trillion out of thin air to pay off this debt, because it's not the US government that's printing the money, it's the Federal Reserve. So basically, as more money is printed, the debt also increases. And obviously, for anyone out there that has common sense, this trajectory that the US government is on right now is clearly unsustainable, and it's been on this path for a long time now, but this is actually speeding up. So the government is not only going towards a cliff, but actually going full speed towards the cliff, about to collapse. Because as more US dollars are printed, that devalues all of the existing US dollars in circulation, basically resulting in inflation. And of course, Bitcoin has a fixed supply, it is scarce. And so basically, as this debt increases, which means more US dollars coming into the supply of US dollars, decreasing all of the existing US dollars value, that effectively increases the price of anything else when you're measuring those things in US dollars, because all you're doing is changing the measurement, the value of the measurement, which is the US dollar in this case. And so when you change the measurement to be a smaller measurement, you have more units basically making up the same thing, and that's effectively increasing prices. And so while this is happening, while this debt is increasing, especially at the pace that it's currently increasing, basically speeding up essentially every single year, of course, this is going to continue to increase prices of just about any assets, but especially assets like Bitcoin that have a scarce supply. And now, obviously, assets like Bitcoin do not just move in a straight line in their price. Of course, we see bumps along the way. We see some crashes here and there. That's perfectly normal to see. Every couple of years or so, we see a bear market every now and again. But if we're looking at the super long-term trajectory of the price of Bitcoin, it's pretty much always up and to the right if we're talking about multiple years or even decades. And that will basically continue moving forward, especially while this situation is continuing with the US government debt absolutely ballooning, resulting in US dollars decreasing in value, basically pushing the prices of everything else up in value when you measure those things in US dollars. But with that being said, getting into some Bitcoin charts today, looking at the 4-day Bitcoin chart, at least as of right now, based on the super trend indicator, this is still sitting in the green, pointing towards a bullish market on the larger timeframes. And so over the last 1 day, not much has really changed on this chart, and something similar can be said about this 3-day Bitcoin chart, because over the last 1 day, it's not like we've seen a confirmed breakout above this resistance or below this support line. And so at least as of right now, the price of Bitcoin is still currently forming this massive descending broadening wedge pattern, which is what I talked about in my last video. And I said yesterday, if we confirm a breakout above this resistance, that would set up a bullish price target at around $92,000, but only if we confirm a breakout above this resistance, which at least for now has not happened. And with that being said, taking a look at this daily Bitcoin chart and what we are now seeing in the DXY, also known as the US dollar index, basically this is seeing a slight increase just in the short term here, which is a bit of a short term warning signal or bearish signal for the price of Bitcoin. Because usually, not 100% of the time, but usually when the DXY is in the bullish direction right here, that is usually bearish for the price of Bitcoin in terms of the trend and momentum on the daily time frame, and vice versa. If the DXY is trending in the bearish direction, that is usually very bullish for the price of Bitcoin in the trend and momentum. And we saw that yet again just a few weeks ago here. We saw a major drop to the downside in the DXY over the last few weeks or so, and at the same time we saw a bullish movement here in the price of Bitcoin, which played out as expected, coinciding with the drop to the downside in the DXY. And so now that we're starting to see the DXY basically point back to the upside, this is a bit of a warning signal that we need to pay attention to. At least for now, we have not confirmed a bullish trend reversal in the DXY, which means at least as of right now, we've not fully confirmed a bearish trend reversal here in the price of Bitcoin. And so at least for now, it's just an early warning signal, something to pay attention to that could potentially lead into a bearish trend reversal signal for Bitcoin, which at least for now has not yet confirmed. And if we're taking a look at this daily Bitcoin chart, at least as of right now, the price of Bitcoin is still finding a lot of resistance in this price range, sitting in between around 67 to 68.3K approximately. So for now, the price is still struggling around that area, because ultimately, in order to confirm a breakout here, we need to see at least a daily candle close well above 68.3K, and ideally flipping that into new support again to actually confirm a breakout here, which at least for now has not exactly happened. And now obviously we did see a couple of candle wicks to the upside just here over the last few days, with the price temporarily trading above this resistance, but at least for now we have not confirmed an actual breakout. And so as of right now, that simply means this is still acting as resistance, so that's the resistance to pay attention to. And even if we confirm a breakout here, we still should be expecting a lot of resistance in between around 72 to 74,000. But once we finally see a breakout above this resistance and above 72 to 74K, once we see a breakout above those areas of resistance, then we can finally expect the price of Bitcoin to head up towards some of these massive bullish price targets like 92,000 once we actually confirm a breakout above these resistance levels. But at least for now, while the price is still struggling around this resistance, if we were to see another short-term rejection, we do have major support in between around 63 to 64,000. And even though the price is still struggling here in the short term around this resistance, technically speaking, we have not broken this bullish price structure of higher lows and higher highs, which means at least for now on the daily time frame, the trend and momentum is still looking bullish. But as I always say, even during a bullish trend, we can see some short-term pullbacks or sideways consolidations from time to time during a bullish trend. And so with that being said, if we're taking a look at the 8-hour Bitcoin chart, we've actually just confirmed a new short-term bearish divergence. And so this basically means this previous hidden bullish divergence has now played its part. We've already seen that bullish movement over the last few days as expected from that hidden bullish divergence. But right now, this is being overrun by a new bearish divergence that has just confirmed a traditional bearish divergence, not a hidden bearish divergence, because we have higher highs in the price and lower highs in the RSI. And so what this means for the price of Bitcoin just in the short term, as in potentially over the next couple of days or so, this is telling us that in the imminent short term, we're due to see a bit of a break from all of this bullish price action, this bullish trend right here. And the last bearish divergence we saw on this 8-hour chart was right here. And we can see what came next over the next couple of days was a bit of a short-term pullback before eventually the continuation of the bullish trend. And so this bearish divergence by itself is not necessarily enough to confirm a bearish trend reversal, but it is enough to expect at least a bit of a break or a cool off from all of that bullish price action. Because usually a bearish divergence most commonly plays out in the form of either a short-term pullback or just some choppy sideways price action before we could potentially continue the bullish trend later on. And if you want to trade these moves in the price of Bitcoin or any other crypto, personally, I take just about all of my trades over on Bybit. So I'll make sure to leave a link to Bybit down below this video in the description and in the pinned comment. And if you use that link down below this video to make a Bybit account and deposit on that account, then you can get up to a $30,000 deposit bonus, but only if you use that link down below this video. And also, if you use that link, it'll take you to this page right here, which is a massive lucky draw happening right now, where you could potentially win up to $100,000 or some free Bitcoin or Ethereum or USDT or trip to an F1 race just by trading crypto using the link down below this video. And so if you're going to be trading crypto anyway, you might as well check this out. Once again, first link down below this video. But for whatever reason, if you cannot access Bybit or if you cannot KYC on Bybit, there is is also Bitflex, which is another crypto exchange similar to Bybit, but you don't need KYC for Bitflex. And so I'll also make sure to leave a link to Bitflex down below this video as an alternative crypto exchange. And with that being said, taking a quick look at the Bitcoin liquidation heat map, and over the last one day, we've just recently seen the price of Bitcoin take out that liquidity that I've been targeting recently here on the channel at around 69,500. And so obviously, if you've been watching my last few videos over the last few days, since all the way back down here, I was saying we have a lot of liquidity at around 69,500. So I expected the price to go towards that level, and the price exactly hit that level to wipe out that liquidity. And since then, we've seen that short-term pullback as a result of this new bearish divergence right here. And we've also now seen the price of Bitcoin effectively wipe out this lower area of liquidity, which was sitting at around 66,500, which I also mentioned recently here on the channel as a level of liquidity to pay attention to. And so now that the price of Bitcoin has wiped out that upside liquidity at around 69,500 and that downside liquidity at around 66,500, what are the other levels that we need to pay attention to on this chart right here? And well, first of all, the majority of the liquidity on this Bitcoin liquidation heat map is sitting at around 70.3K to 70.4K approximately. So basically just above $70,000, there's actually over $1 billion worth of short positions that will get liquidated if the price of Bitcoin goes above 70.4K approximately. And so that is a major price target to pay attention to that we could potentially hit perhaps in a few days from now, because remember, we still have this active bearish divergence, so we need to consider multiple charts, not just rely on one chart. And as for downside liquidity, we still have a decent amount of liquidity right here at around 63.4K to 63.5K, so just keep that in mind as well. But once again, this bearish divergence on this 8-hour time frame means we're most likely going to see a bit of a short-term cool-off from this bullish trend, but not necessarily the end of the bullish trend. And with that being said, taking a look at Ethereum on the daily time frame, right now the price of ETH is still playing out a lot of choppy sideways price action here in this massive sideways price range, still bouncing from this exact area of support. So for now, we still have this support in between around 3150 to 3250. We also have a lot of support in between around 2.8K to 2950. And as for resistance, we have a lot of resistance in between 3550 to 3650 and more resistance in between 3.9K to 4.1K. And while the price is basically bouncing around between support and resistance, the trend and momentum is actually looking relatively neutral. We're just essentially chopping around sideways here. And if we're zooming further into the short term, looking at the 6-hour time frame, we can see over the last one day, the price of ETH pretty much exactly rejected from this previous Fibonacci level of support, which is the 23.6% Fibonacci level, now acting as new resistance, which is sitting at around 3370 to 3380. And that's pretty much exactly where we saw a rejection from just recently. And so at least for now, in the short term, that is the level of resistance to pay attention to, considering we've just found resistance at that level as expected. But once we eventually see a confirmed breakout back above around 3370 to 3380 with candle closes above that level and ideally flipping it into new support, then in that case, the next short-term resistance is closer towards 3,500, or basically this area of resistance that I just mentioned earlier. And with that being said, taking a look at the price of Solana on the daily time frame, and right now the price of Solana is still somewhat struggling around this area of resistance, sitting in between around 183 to 187. And now obviously just over the last one day, we had this attempted breakout to the upside with a candle wick to the upside. But remember, this breakout does not actually confirm until we at least see a daily candle close confirm well above 187. And ideally, if the price also flips that previous resistance into new support, that can further confirm the breakout to the upside if we see that happen. And so in that case, once we actually see a confirmed breakout here above 187, then in that case, the next major area of resistance is sitting in between around $200 to $210. And as of right now, we still have more room to the upside here in the RSI. Even with this latest move to the upside just here, the RSI is not overbought like what we saw close to a week ago. And considering the price is still forming higher lows and higher highs, the trend and momentum is still clearly pointing in the bullish direction despite the price struggling around short-term resistance. And now, if we see some sort of short-term pullback or rejection from this resistance, then in that case, we should find major support in between 170 to 175. But once again, even if we continue to struggle around this resistance, for as long as we're holding above around 170, technically the trend is still looking bullish. And once again, if you want to trade these moves in the price of any crypto, check out those links down below this video to claim those extra bonuses. And if you want to actually know how to trade crypto, no matter if the price is bullish, bearish, or chopping around sideways, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.